YouTube, hey there, it's Casey Dimon, TaxSaleAcademy.com. Thank you so much for joining me today as I record this week's episode of the Tax Sale Podcast. As always, if you like podcasts, check us out, TaxSalePodcast.com. Let's go ahead and record that episode right now. Welcome to the Tax Sale Podcast, where tax sale investing is made easy. My name is Casey Dimon. I'm a tax veteran. I am the leading tax sale expert. I'm the author of the Tax Sale Playbook, founder of the Tax Sale Academy, and I am your host right here on the Tax Sale Podcast. Thank you so much for joining me on today's podcast episode. As a reminder, this is a completely free podcast brought to you through and because of the Tax Sale Academy, located at TaxSaleAcademy.com. All right, today I want to discuss the baby steps of tax sale investing. The truth is that if you want long-term sustainable success in this business, you must begin with the baby steps. This is such an incredibly important concept to grasp. I get emails and messages all of the time from people who just heard about the opportunities through tax sale investing. And they want to get started, which is admirable, right? But they're so focused on the money that they see themselves making, they completely forget there are a lot of steps to get there. You don't automatically go from A to Z. There's a whole bunch of steps in between. And that can take some time investment. And the same thing can be said about learning these baby steps. People want to get into a career that has a potential to provide multiple six figures of income to them. But they won't invest a month or two into studying the business. Or they won't invest $5 into a book or more into a full-blown training academy. It's really mind-blowing to me that there are thousands of people who will spend 4 years and $20,000, $30,000, $50,000 or more to go to college in exchange for, according to ZipRecruiter, an average salary around $50,000. But they won't spend just a month or two and a fraction of that to learn how to properly invest in tax-defaulted real estate. I'm not knocking college. I actually believe in college for a lot of people. But what I'm trying to get at is I want people to understand that if you want to be successful as a tax sale investor, you must invest the time. Now, that's a topic for an entirely different day. But the point is, you don't just go from learning about this business to making money in a few days. The horror stories that I hear all revolve around the same story of somebody who have forced themselves into an investment that they should not have made. And oftentimes, they did not know that they shouldn't have invested in that property because they failed to learn in the first place. They didn't know until it was too late. So let's discuss some of these baby steps that you must take if you want to see any sort of real success while saving yourself from becoming another horror story. First off, and it's not so much a step as it is a state of mind, you must slow down. If your car is traveling at 5 miles an hour, you're going to have plenty of time to take in all the sights and to learn what to do and what not to do with minimal chances of hurting yourself. If you're traveling 100 miles an hour, though, you stand a good chance of missing a lot. And worst case scenario, you stand a good chance of losing a lot of money. This is not a video game. This is investing in real estate with real consequences that go far beyond just your initial investment. Make the decision to invest when you are ready, not based on some sort of preconceived artificial timelines. Learn. Before anything else, learn. Become a student of this business. People ask me the number one mistake that I see. When I look at all the issues that I hear about, such as not understanding the process, not doing the proper due diligence, overlooking something, and a lot of other stuff, it typically revolves around that person failing to take the time to learn. I'm going to tell you a story that helps illustrate this. Someone once told me they'd rather learn by doing than by studying since they weren't that good of a student anyhow. Well, that $10,000 condo that they ended up purchasing was a great deal at first. And then they realized that the entire complex was scheduled for demolition by the city and had been the subject of countless lawsuits and had fallen into disrepair. About a month after their purchase, the city knocked over their condo and every other condo in that complex. And then they assessed each one of the owners a portion of that demolition fee. That $10,000 learning experience investment turned into an $18,000 nightmare for that person. Learn before doing, and then as you're doing, use that process as a learning experience as well. And when I say that I want you to learn, it's not just a matter of, okay, this is tax deed investing, this is tax lien investing, this is where I get a list, that kind of stuff. That's all surface level type stuff. It goes much further beyond that. What is the entire process for researching the property? What's the entire process for performing due diligence? This is an insanely important one because so many people only perform 1/10 of the required research. What about the title implications? What about the strategy you'll be using? There's so much to learn, and it is so much deeper than surface level type stuff. Another baby step that is often overlooked, reading the laws. The laws when it comes to tax law investing in your state are the rules by which we must play. They are the words that allow us to exist as tax law investors. And to think that you won't take a few hours to read and study them, it's insane. You can find these laws on Google, or you can grab a copy of the Tax Sale Law Guide when you buy the Tax Sale Playbook. Go through line by line and read every single word. A good portion of the answers to the questions that I get are readily available inside of those laws. Now, these laws do vary from one state to the next. So if you're investing in multiple states, make sure you take the time to read the laws for each state. Now, once you've done that, it's time to start browsing through different counties. And this is super easy to do. Go to Google, type in the name of your county, followed by the words tax sale. Look at their website. Click every single link connected to their tax sale page and read every single thing on each one of those links. Use it as a learning opportunity. It's a completely free, easy learning opportunity. And right now, I would suggest that you go to a number of different counties in that same state and review every single one of their sites. While the general process is probably the same in the counties in the same state, some counties will have information that will be more helpful than other counties. So go to all the sites. Take some time to look at these sites and to learn through the county's resources. Now, as you're looking through the county websites, there will likely be some counties that pop out at you. Maybe it's the number of properties they have. Maybe it's the type of properties, the location, the dates that the auctions are held, whatever it is. What I want you to do now is go and take a look at the previous auction results in that county. Research some auction results from a year ago or 2 years ago, and then research those properties and see what happens with those properties. Did the investor flip them? Did they keep them? Was it a good deal, a bad deal? And then compare those with a more recent list, like from the past month or two. Does it still look like there are some decent properties available at that auction going for decent prices? Right now, that should give you a clue whether you want to invest there or not. If so, if there's good deals there, it's time to take a new list and begin your research. Even if you're still working on saving money or finding a funding source or whatever, go ahead, start your research right now. This is the practice mode. And do it in depth. Really research those properties. Act as if you were spending the last dime on a piece of property and you're going to go broke if that investment doesn't work out. And truthfully, you should research every property you buy like that. But determine your maximum bid amounts. Go through the process. If there is something you don't fully understand, like say valuations, then research that specific topic until you're confident with it. But know everything you possibly can about the property as if you would be investing in it. And then you're going to go to that auction, not to buy, but to learn. And I want you to prepare, to register, to take notes, ask questions, listen to bids, pay attention, record the winning bid results, be involved, and be focused. This is the best way to practice while learning. After the auction, talk with other bidders, network, and ask questions if you're able to. Myself and many Academy members have learned a whole lot simply by going to an auction, sitting there, and absorbing what is happening. Now, once you leave that auction, go analyze what happened. Who are the primary bidders? What do they typically do with the properties? You can find this stuff by Google and doing a little bit of research. What about the properties that you like, that you would have purchased? What did they sell for? Would you even have been able to purchase them based on your maximum bid amounts? What didn't you understand, and should you take the time to research more on? The goal here is to find the confidence combined with the knowledge necessary to be able to make smart investments. If something is not clear to you, take the time to go back and research what you're not clear about. In the end, after all these baby steps, you should be confident and knowledgeable when it comes to knowing exactly what to do, when to do it, and how to invest in tax-defaulted real estate. At that point, it's simply a matter of continually learning and going through this process over and over again as you gain experience and knowledge. Tax law investing is not something where you should try to grow leaps and bounds in a week. The ones who try this method, the ones who go from learning about tax law investing today to buying a whole bunch of properties tomorrow, are the folks that fail miserably. Instead, what I want you to do is to look at it as a long-term sustainable business where you must take these baby steps required if you want to be successful. And there are certainly plenty of these steps, but every single one of these lays down the foundation for your long-term success. Just like the foundation of a house, this foundation is paramount when it comes to whether you will succeed or fail in the tax sale business. I truly hope that this episode has helped you take a different look at this business in the proper way to get started. If it has helped you, or if any of our episodes have helped you out, please do us a huge favor and leave some positive feedback on whatever podcasting platform you're listening to us on right now. And if we can teach you each one of these baby steps or anything when it comes to tax law investing in great detail, just head on over to taxsaleacademy.com, become a member of the Academy to get access to our most comprehensive and step-by-step training platform. Take care and make it a successful day. We'll see you next time right here on the Tax Sale Podcast. Bye-bye.